You, I guess, just briefly alluded to military, and I'm wondering if your analysis actually looks seriously at the relationship between these demographic changes and possible military aspirations and actions.
Yeah, well, it's certainly something we do monitor that quite closely, and that's why we are looking at countries like China who are investing heavily in AI, both in a economic sense, but in a military sense. They know that the days of 2 million man standing armies are long gone. It's just not possible to do that. And we see here, even in democracies with professional armed forces, it's very hard to fill the numbers these days. So the trend towards automation and AI is something in the military sphere, which is very important. And those countries that are investing in it, which are primarily the US and China, and you have, to a smaller degree, countries like Israel, which are doing so, that's going to go forward, and that's going to be a big impetus in those sectors. But you're going to see that. I think we talk about being on our last generation of manned fighter planes, for example. I mean, we're going to have unmanned planes in the next generation, at least the more advanced countries will. And that's probably going to exacerbate the gap militarily between those countries that invest in that, which are primarily the US and China, and the rest of the world. We've seen that gap close a little bit because of the fact that warfare has changed. We're looking at more counterinsurgency. That kind of takes away the technological advancements that the US had and some other countries had. But now as we move into these major advancements in AI and others, that gap is probably likely to reappear. But it holds the potential for a significant arms race, much like we saw in the nuclear sphere in the 1950s and 1960s and 70s. Now the race towards AI and automation in the military sphere between the US and China going forward. We're going to see tremendous spending. China's military spending has risen tremendously. It's doubled over the last decade. It's still only about a third of the US, but the gap is closing and it's continuing to close. They've just launched their second aircraft carrier. They are investing heavily in the military sphere, and there will come a day where their military spending is much closer to ours than it is at the moment.
Michael, great presentation, and thank you. As we look to diversify our supply chain out of China for obvious tariff reasons, we are investigating heavily into Vietnam. Can you talk about concerns or issues you might have with that?
Well, Vietnam is clearly on the radar of a lot of our clients. It is center number one. The government has done a good job of promoting a steady economic hand in terms of policy, in terms of attracting investment. They've invested heavily in their infrastructure and continue to do so. So we're seeing a lot of potential for investment there. Vietnam has undoubtedly been the big winner in this whole shift away from China, which has accelerated due to the trade war. So you're in line with a lot of other companies who see Vietnam as clearly the clear choice. There are other options in the region, but they are either too expensive, I'm talking about Malaysia, or they are behind, especially in infrastructure development, and there I think of Indonesia and some of the other countries in the region. So Vietnam clearly is best placed at the moment to do what China was doing in previous decades.
Michael, thank you for attending, and thank you, Kansas State. A question I have is you mentioned several times about macro productivity. Could you put some definitions around that?
Well, I mean, if you look at first, well, I mean, from the very basic standpoint, if you just look at relative productivity, it's output divided by labor. It's it. But if you look at total factor productivity, you start to look at capital investment. You factor that in, and what it means is the inputs that we're putting in, be it labor hours, be it capital, is bringing out less output. Simple as that. And it's just the trend continues. The trend continues going forward. And unless we're able to somehow reverse that, because the labor input is going to decline, the capital input has been weak and is probably going to decline going forward, we need to get more out of less coming in. Simple as that. And it's a big challenge. And unless we're able to do it through technology or through process improvements, it's going to result in lower economic growth rates going forward. We've been working on a big study right now on that very issue. And it's kind of like you're down, it's 4th and 10, you're losing by 5 points, and you need to get the ball in the end zone, there's 2 seconds left. It's kind of where we are right now, in my opinion. We've been sacked by demographics. We committed an offsides penalty by putting up trade barriers. We need to throw the productivity Hail Mary downfield. And right now, it just hasn't been coming. We're looking at decades of slower productivity growth. And we are looking at the factors that go into pushing productivity up declining as well. So it's very difficult to see going forward. Well, there was a period in the late 1990s in the U.S., because if you remember those charts, Germany has consistently declined in productivity. We had that big tech investment in the U.S. in the late 90s, where the information revolution really was kicking in, and we did see an increase in productivity for about 5 or 6 years. Not a huge one, not back to the levels earlier, but we did see an increase, even as labor inputs weren't rising substantially, even as business spending was starting to weaken. But we did see productivity go up. So there was a little bit of hope that, yes, now we've done it. Now we've gotten to this. The technology is now allowing us to become more productive. But in fact, in the beginning of the 2000s, we went back down. We've been going down ever since. So that's the nearest example we have, unless you go way back to major changes after World War II or changes in the beginning of the 20th century, technological changes. There has not been a period in the modern world where we've had a sharp increase in productivity.
Last year we were talking about the 10% and we thought it would hold, and then in May we found out from the tweet we were going up to 25%. Based on the 2020 election, we haven't heard really either side talk about the tariffs going away. It hasn't been a point brought up from either side. Even if we have a change in the administration, or even if the current administration stays, do we have a risk of the double arm effect to try to push that along? Can we see a further increase in the 25%?
We won't see it this year. I think if you're the Trump administration, this trade deal is what you wanted. You've told voters in rural parts of the Midwest particularly that we've done something for you. We're opening China's market to your products. So I don't think he wants to rock the boat there. Even if I don't believe anyone in the Trump administration believes that 200 billion in increased imports is realistic in China. But it's telling voters we're doing something for you. So I think this is for them exactly what they wanted. They wanted to get the message out there. We're going to keep the tariffs in place. We're going to protect industries, but at the same time, we're opening markets for you. And I don't think you'll see any change. And again, you probably won't see a major discussion of how far behind China is on keeping their promises until 2021, so until after the election. So I don't foresee any major change here. I think the focus of the Trump administration is going to turn to Europe. I think there's some trade issues there that they see that they can win some points on, and that they've been talking about for a number of years. I think if China, and I don't think China wants to rock the boat either, particularly now with this coronavirus outbreak. I think you won't see any change at all until after the election. And then who knows? I mean, because the election at the moment is so unpredictable, we'll see what happens after that.
If there is a rollback, how do you see that taking place? Because it's just drop off.
I don't think that's a very popular. I don't think that would be a popular stance for even if the Democrats take the presidency next year. I don't think they would just unilaterally lift all the trade barriers. I think they would want some type of proof that things were being done in terms of intellectual property protection, access to the market. So that could be a lengthy process, in fact.
Do you look at what's the impact of women empowerment and women's rights in your analysis?
Of course. It's one of the great holdbacks, of certain regions of the world, of their economy. We've seen the fact that in the West, for example, that women are now so engaged in the workforce and in management that has had a positive impact on the economy and has helped offset some of the demographic declines we're looking at. If you look at other regions of the world where women still are underrepresented in the workforce, underrepresented in senior positions, there's a lot of potential for growth there. But will that be realized? Is that something that can be done? If you look at Saudi Arabia, for example, a country who now is suffering because the oil prices are down, but because women are still largely excluded from many parts of the economy, they're holding back their own growth. So it's certainly it's something that's being addressed in many parts of the world, but we've seen major advancements in the West and in parts of Asia already. But it's many of these emerging markets that haven't yet quite gotten there that we need to see some advancement.
Back to the productivity growth. Obviously, you foresee it being down and not changing, but are there any specific industry or even broad industry where you see something that might bring
that big technology windfall that's out there that just can't occur?
We're not saying it's going to be down forever.
That's
We believe that if certain technologies can, for example, AI has the potential to transform entire industries. We've seen continued growth in productivity in the IT sector. If we can get driverless trucks, for example, what that could do for the transportation industry would be substantial. But we're many years away from realizing any of those. And so my fear is that over the near term, it's very hard to see where that productivity growth is suddenly going to come from. I mean, we're looking 10, 20 years down the road right now. And yeah, we'll have to see. But I think AI is the one, of course, where most economists and most scientists think has the most potential to transform entire industries. But for all the hype, we're still a long way away from really realizing actual on-the-ground substantial increase. If you look at what happened, we talked about the information revolution. You look, that was really started to roll out late 70s, early 80s. We didn't see productivity gains from that until the late 1990s. And even then, they were short-lived. AI clearly has a much bigger potential, but it also has the potential to take much longer to really be realized.
Michael, good job to you. This is in regards to mainly China, in regards to the reduction of the population and foreign investment. Thanks to the output, what can be done. If I'm just on the outside looking in, you have this reduction in the population, but there's a need and there's a want for the crops or whatever. Could you see that being a reason for foreign investment related to Chinese businesses investing in other countries since they can't produce themselves, they don't have the workforce?
Oh, absolutely. Absolutely. That's exactly what happened in Japan. If you remember back in the late 1980s, early 1990s, there was a tremendous surge in Japanese investment here in the US and elsewhere. And that was because Japanese business leaders realized before everybody else that, look, our domestic market is on the verge of shrinking dramatically. And this growth that we've been achieving in years for decades was unsustainable. So they started investing heavily in factories here in the US and elsewhere. I think you're going to see exactly the same thing in China. We're seeing it in Europe to a degree. You see a lot of investment coming into the US from Europe right now because Europe's growth outlook is not as strong as the US's. Its demographic situation is worse. You're starting to see a lot of major investment from European companies here in the US. China, with all the cash they have on hand, and the fact that the domestic market, while it's been growing and it's getting wealthier, is facing this demographic decline, yes, you're going to see exactly the same thing. And again, how did the Japanese respond to trade barrier threats then? They built factories in California and Ohio and elsewhere. The Chinese could react the same. That's a nice vote winner, and it's a nice way to make nice with the politicians if you build a factory in their hometown, for example.
For your presentation, I wanted to ask about U.S. Treasury bonds and the gap between the long-term and short-term yield being inverted as of August in 2019. Do you see that as being an indicator for recession like you see in the news and things like that, or is it sort of like fear mongering type of?
Well, it's one of those things you look at and you say, well, it's happened before and it's almost always led to a recession. It must be that way again. But I think we're living in such different economic times today than at any time in the past that it doesn't necessarily mean that that's the case. We are right now, it's a reflection of the confidence in the economy, and we are in such different levels of confidence right now. For example, you look at every business indicator here in the US or elsewhere, and business confidence levels are tremendously low. And then you look at the stock market, and the New York Stock Exchange was up 29% last year. NASDAQ was up almost 40% last year. So you're saying, here are the businesses, they're scared to death of everything that's going on, and here are investors, and they're gung-ho, we're investing in everything. So you're seeing the same thing with the treasury bonds. Just two different views of the economy. People who are looking and saying, well, we're headed for a recession, everything's gloomy, the trade war is killing us, and on the other hand, well, no, we're still growing, we're just going to keep it. So I think that's what's reflected there. And it's a kind of irrationality, and it's extended from the stock market into bonds and many other investment areas, and that's not going to change. I don't see any. We're not predicting a recession. Even when we saw the trade curve and the bond yield curve invert last year, that didn't change our forecast one bit. Yeah, we don't see a recession in 2020. 2021, we'll talk about that next year. But.
How does our apparent indifference to the annual deficits compare to the other developed countries?
We're more indifferent than most. A lot of countries are indifferent, but we are, at the moment, incredibly indifferent. And it's like I said, we're going into an election where both sides are planning to raise the deficit, quite simply. I mean, the Trump side is saying more tax cuts, even though he promised 4% growth with the last tax cuts, and we didn't come close to that, which was anybody could have told you that was the case. And you have Democrats, some of them talking about huge spending increases, free healthcare, free universities, whatever. Nobody's talking about how they're going to pay for it. So at the current trend, we're headed for 1.3 trillion in our budget deficit in a few years, but that doesn't mean we don't know what's going to happen after the next election. So there's a high level of indifference. We see budget deficits in many parts of the world. It's not just here in the United States. Very few countries have limits. Germany is a famous example where they pretty much don't run a budget deficit, and it's pretty much enshrined in law there, which also hurts the economy to some degree because they're not able to invest when they need to. But we do need to address that at some point. The larger it gets, the larger the debt gets. Debt levels are rising again. You know, after the financial crisis, debt levels fell pretty substantially around the world. They're going up everywhere again. And then again, we're creating a dangerous situation where if we're not generating growth, we're not able to pay off our debt, and confidence levels fall precipitously, that's going to come home to roost at one point. So yeah, we're too indifferent, let's put it that way.
So how does an economy effectively deal with the budget if they were going to, as strategists?
How would the budget deficit to reduce it?
How would it occur?
Well, you have to balance. You want to maintain growth, and you need to make, at the same time, cutting spending. Now, we were able to do it in the 1990s. Of course, famously, we ran a budget surplus for a couple of years, which seems like ancient history now when we look at the budget situation. We would have to look at cutting certain programs. We'd have to look at finding a way to boost economic growth that isn't simply through tax cuts, which do, to a small degree, boost growth, but we need actual investment in long-term growth, so in infrastructure, in education, in making more of the workforce productive. We have big issues right now, both with the rising number of retired people, plus the rising number of people out of the workforce. How do we bring those people back into productive society somehow? I know a lot of people who are often forced to retire but would like to remain productive, and there are too many people who could be productive and they just simply have disappeared from the workforce. So we need, if I were a politician right now, I would be focusing on getting people back in the workforce. That's very important because this lack of finding people to fill jobs has really been a big drag on many sectors of the economy. Again, I mentioned trucking before, but that's one industry where good luck finding truck drivers these days. Many other sectors, it's the same thing. So that would be a big focus of mine. That's not expensive. That would have positive benefits, and hope to boost growth, get it back to somewhere close to 3% if possible. I don't think we can go any higher than that, given the circumstances of where we are as an economy. Try to get growth at around 3% and get spending under control. We have a big issue there. You're going to need to make some tough decisions. It's very hard to get reelected when you make some of those decisions, but someone at some point is going to have to make the tough decisions. And historically, what we've seen is when a party in power, whether it be the Democrats or the Republicans, go against their base to enact reforms for the betterment of the economy, that tends to work. When you see Republicans who make sensible social spending decisions, it tends to get done. When you have Democrats who crack down on welfare abuse and all, it tends to get done. That's something we need to see. But the polarization we have right now on both sides in the U.S., it's very hard to see us reaching compromises like that at the moment. And just cutting taxes isn't going to do it. Just raising spending and raising taxes isn't going to do it. It's going to have to be something much more substantial and something much more broad-based to benefit all parts of the economy. And I wouldn't be reelected anyway, because I would offend so many people.
Back on the point of getting people back in the workforce, our chief economist has been very vocal about getting people criminal records back in the workforce.
Yeah, that's absolutely. We have the highest rate of incarceration of any developed economy in the world, and often that means those people become outside the economy for the rest of their lives. And that's really a waste. Obviously, there are some people you don't want back in the workforce. But for people with minor criminal records, people who have been rehabilitated, absolutely we need to make them productive parts of society, 100%. And that is another drag on the economy, just like the lack of jobs, the lack of people to fill jobs. This is another aspect of that. So absolutely, totally agree with that. Yes? Oh, sorry.
Well, I quite apocalyptic. You're not painting a very rosy picture.
No.
Anyway, the global economy in the future, I'm curious if you are, let's start Browns fans, always trying to find a silver lining. Can you give the 1, 2, or 3 things that you see are positive moving forward that we should be paying attention?
Lamar Jackson could get hurt. Ben Roethlisberger can retire. The Bengals stay the Bengals. No. Oh, you mean about the economy? So 3 positive things going forward. Well, there are definitely some. I think technology does still offer substantial promise. It has to be. AI has the potential to be the next great revolution on top of the industrial revolution, transportation revolution, the information revolution. So I really believe that there is the potential for huge transformation. You still have huge untapped markets in the world that, while they are much more challenging than China was, and China has generated tremendous amounts of wealth, not just for China, but for the rest of the world, there are parts of the world that have huge untapped potential with billions of people that, if we can get them into the global economy and have them integrated, they have the potential to generate more growth going forward. So that's an opportunity. It's a difficult one. It's a very challenging one, but it is one that we have to take advantage of. And then third, we have to look at, I think, the fact that the population is slowing at the time where there's such a great level of environmental awareness isn't necessarily a bad thing. We need to create more sustainable growth. We need to grow. I mean, don't get me wrong. You hear a lot of people saying growth is bad. We need to save the planet. We need to grow in a sustainable way, that we save the planet while we generate growth. We can't, as a society, function without growing. Our social systems will collapse. Our infrastructures will deteriorate. We need to grow. We need to generate more wealth. But we need to do it in a sustainable way. And I'm happy that there's a greater awareness of that finally in the world. So those are 3 things I'm optimistic about. Yeah.
Has the opioid crisis factored into any of the calculations here in the United States and abroad?
Well, it's mostly here in the U.S. at the moment. There are drug crises in other countries, but the opioid crisis is unique in that it's happening in such a rich country, and it's having such a major impact on certain areas of that country, and it is without question played into this lack of available labor in many parts of this region, in the Midwest, in Appalachia, and it has had a huge impact on the economies in those regions. And I spoke on Wednesday at a conference where the head of Team NEO for Northeast Ohio was there, and it was one of his main issues that I discussed with him before the conference, was that the opioid crisis has just resulted in too many companies not able to find people to work there. It's a huge factor of why so many people are not in the labor force right now. And we talked about it earlier. Getting people who are not in the labor force, whether it be because they've voluntarily chosen to leave, or because they have some type of addiction problem, or because they have a criminal record, we need to make more parts of our society productive members of our society. So, yes.
So, Michael, I guess 2 questions, 2 completely different. Legalization of drugs. The challenges that puts on business and industry as far as drug testing and allowing people to operate equipment machinery based on that environment. What are your thoughts on that?
Okay. Well, that's certainly an issue that is spreading tremendously quickly. I mean, we've seen, how many states is it now have legalized marijuana? 13, 14? Luxembourg, where I'm based, is in the process of legalizing it. The Netherlands isn't far away. It's never been illegal, but it's never been not available. And a lot of other countries in the region are doing the same. So it's clearly a trend that's moving forward. I think in the United States, a lot of states saw how much money Colorado made off of it, so they wanted to get in on that game quickly. Canada has done the same, but it is having an impact. I think that does definitely have an impact on, again, the number of people not in the labor force. And you bring up an interesting point from a safety aspect, that can we trust workers who live in a society where much more is legal to operate dangerous machinery or in some type of process that could be both dangerous to them or to other people. So that is an issue, but it's not in any way seeming to factor in any decision making with regards to should we make it legal or not. Because the trend we see around the world is it's becoming legal in more and more places. The one place that's incidentally cracking down on it is Amsterdam. They've made it much harder because Amsterdam's not far from us. It's a nice town to visit. And you just don't, you now have to be apparently members of certain groups to go to coffee shops. It's much more, it used to be you just showed up and they were everywhere. And it's changed quite a bit. So Amsterdam's cracking down and the rest of the world is making it legal. So make of that what you will.
So my second one is because we're talking about strategies, we talk about deficits and decline. Well, let's play the what if scenario. The fact that government is there to wait on the crisis so they can be the solution to the crisis. So it's not viable to get reelected if you make these changes. So the deficit continues to increase, we run along. What's the long-term forecast and the strategies we should be thinking about based on these changes?
Well, the big concern with that is when we do have another crisis. The world is so ill-prepared. I'm not suggesting there's going to be another recession on the scale of the financial crisis anytime soon, of 2009. But let's say there were. Let's say we got back to 2009, where the economy shrank in some places 3, 4, 5%, if not more. We're not prepared. In 2009, we had a lot of tools at our disposal. We threw a lot of money at certain businesses and certain industries that needed it. We were able to cut interest rates tremendously much. That's no longer in place. Interest rates are now quite low here in the U.S. and in most parts of the world, or most developed parts, it's zero or negative. So that tool is gone. Because the deficits are again so large, the ability to just throw money at the crisis isn't there anymore. So we're out of ammunition if another financial crisis came. I think Ben Bernanke did a tremendous job in 2009, 2010 in saving us from something significantly worse. And I think it was important that he was a scholar of the Great Depression. He understood exactly the stakes. But we are now in a situation where if we run into another crisis of that magnitude, and these things usually aren't, in the 19th century we did have crises like this every decade or so, but since the Great Depression we've only had one at that scale. If we had another soon, we are not prepared. I'm not saying one's going to happen right now, but we are very ill prepared should a combination of events combine. The governments and the central banks around the world, we would be in big trouble if that happened again, much more so than in 2008 and 2009 during the last financial crisis. So that's, as the government being the savior for everybody, it's not that strong anymore. It's kind of like Superman had some kryptonite between then and now and is just not as strong as he was in 2008. So it's a big risk. I mean, it's how we would deal with a crisis right now is very hard to imagine.
Yeah, my question would be, any guesses to why we managed to eke along here economically in the U.S. from 2009 till now and not really had a significant impact?
No, well, and that's part of it, is that the recovery was so tepid that it just kind of kept going along. Had we had a recovery in 2010 and 2011 where we were growing at 5%, which a lot of economists thought would be the bounce back, we might have been right back down again. We would have been a cycle. But in fact, because spending growth both on the business and consumer side took a while to get going, that's kind of played a role in it going along. I mean, we haven't grown at rates like in the 1990s or early 2000s at all during this recovery. The recovery has been very, very tepid. And I think that's a big factor in it. The other thing is consumer spending has remained strong through it all. Consumer spending had quarters where it was poor. I remember coming here and talking about what a bad winter it was, or Christmas season, so the fourth quarter was very bad, or the first quarter was very bad. But nevertheless, consumer spending has never had a long period of decline. The fact that the U.S. is strong in a lot of high-tech sectors has also played a role in us continuing to grow. Our reliance upon more volatile sectors like automotive, for example, is lessened over time, and instead high-tech sectors which manage to grow no matter what the economic situation, we are leading in many of those, so that's played a role. So it's a number of factors. We're fairly lucky in that regard, that we have a strong presence in growth industries, and we have a strong consumer market. And those two things have allowed us to grow. And if you look at other countries that have managed to do something similar, if not at the rates we've been doing it, it's a similar combination of a diversified economy with some high growth sectors and strong consumer spending.
Michael, we can't thank you enough.
Thank you.
I'll come up to your level here.
All right, come.
The information we heard this morning is not even the tip of the iceberg of the data that's available through Michael's company, ISA, exporting companies who would certainly do well to take advantage of research and actual facts before venturing into new markets. And I know we have many companies here in the area that have, and I hope others of you will consider it as well. I've already looked at the calendar for 2021, and we tried to nail him down while we got him here, and we're either going to move up to January 29th or back to February 5th. Groundhog Day is kind of right in the middle of the week.
I think the 29th would probably be.
So I think we'll probably go on with the 29th, but that'll be a ways off. Mike will be available for a few minutes if somebody wants to follow up with him individually or make arrangements to meet with him at some future time. But again, we thank you so much. This is just a spectacular opportunity for people in this area to get plugged into the world scene and have some idea what to expect. Thank you so much for coming, and wherever you're going, drive safely back and take care.